This month, we're privileged to have a distinguished panel. We'll get to in a moment. But the topic of our panel is key decision points and ROI measurement methodologies for investments in property technology. So the question is, what are these decision points? Why are they relevant? Why, in general, whenever you do an investment into anything, whether it's time, money, or other resources, you're looking for some kind of metric, some kind of KPI. But in the case of prop tech, sometimes it's tangible, sometimes it's not. And some people have said, well, maybe there's a short-term benefit. Maybe there's operational savings in energy or labor or maintenance costs. Maybe there's a midterm savings having to do with tenant experiences or tenant UX or retention improvements. Or maybe there's a long-term value in terms of asset appreciation, some kind of ESG premium, or some kind of competitive positioning. So I think what we want to do in this discussion here with these panel of experts is look at some of this, look at what is the basics of prop tech to begin with, and maybe some use cases, and maybe some barriers to adoption of some of these tech into these use cases, and maybe some kind of before-after implementations where there is a financial metric we can talk about. So what I want to do next is shift my attention to our panel and share that I feel very privileged to be hosting this call. The panel consists of Stuart Appley, and he is on the board of directors of the U.S. PropTech Council, and he'll go more into his background. We'll soon have Ilan Zahar, who's the Chief Technology Officer at Prime Group Holdings. We'll have Christopher Perri, who serves as the Global Alliance Director for one of the life sciences accounts at CBRE, and just brings massive experience. And myself, I serve as the head of KMC Consulting, and it is a division of KMC Controls. So what I like to do is just a little housekeeping and just let you know that we do these on the third week of each month. And so the next month will be on September 19th. So Friday, September 19th at 1 p.m. Eastern, we're going to talk more about the trends in workplace and building design and their impact on return to work metrics. But this month, we're going to go around the table a little bit and get to know each panelist. And as you have questions, either for them or for me or for something you want to express, put it in the chat and we'll all monitor it. We'll do our very best to somehow incorporate it into the fabric of our discussion. And we have a backstop because we have our producer. We have producers, Sky and Rick on the line here, who are in the back office here, making sure that everything's going smoothly. Roughly about a week after we finish this discussion today, they will do post-production on the recording and send it out automatically to everyone who has registered, whether you attended or not. So let's get started. So I'd like to start with Stuart. Stuart, would you please introduce yourself?
Yeah, thanks, Ari. Thanks for having me too. So Stuart Appley, currently the founder of Baytech Advisors, consulting firm that is pretty broad. I'm doing prop tech advising for a few prop tech companies, doing some advising on smart buildings, and also doing advising predominantly on implementing AI throughout commercial real estate. My background, going back, I spent 9 years at CBRE, worked with Chris and you, Ari, there supporting digital transformation at CBRE on the Occupier side, and then was embedded on the Google account for 4 years and learned a lot at scale across real estate. Going back before that, 9 years CTO, CIO at Shorenstein, and so spent a lot of time in investment management, fund management within commercial real estate. 9 years before that, CIO at a venture capital firm, and living in the Bay Area. I've had a lot of exposure to emerging technology, sat on the board of different startups, and so very passionate about startups in general. And then with my background in real estate, also having worked at loan companies, mortgage companies, banks within real estate, got a pretty broad background. I've got a good eye and just a passion for where emerging technology can really help the commercial real estate industry that we'll get into in a little bit more. But thanks again for having me and looking forward to the discussion.
Of course. Well, when we circle back, I want to get into some of your thoughts about the prop tech council in terms of what motivated you and kind of where it's going. So maybe be thinking about that. Chris, please introduce yourself.
Yeah, thanks. All right. Thanks for the invitation. Great to be here with you today. My name is Chris Perri. I'm based down in Charlotte, North Carolina. And as Ari said, I have the privilege of overseeing one of our large global pharma accounts at CBRE. I've been with CBRE over 20 years and a variety of sales, consulting, and operational leadership roles in both serving the investor and the occupier, although most of my experience is serving large global occupiers. So as we look at the prop tech space at CBRE, we look at through the lens of corporate and enterprise technologies that can apply to either investor or occupier, or sometimes both at the same time. We also look at bespoke solutions that work within a client account environment. And then we often look at even more tailored solutions that may be more appropriate for a site or a region, depending what our scope is as a service provider. So it's an extremely interesting area. Throughout my career, I've always tried to stay pretty close to where emerging data and technology innovations and investments were happening and trying to apply it to our clients' desired outcomes. Sometimes our clients are seeking efficiency. Sometimes our clients are seeking experience. They're almost always trying to get more experience for less cost. And the role of technology and process and automation are clearly helping advance the cause.
Experience per square foot, right?
Yeah.
Or great experiences per square foot. So hopefully we'll be joined soon by Ilan Zachar, and he's serving as the Chief Technology Officer at Prime Group Holdings, which is a private equity firm based in New York, and they specialize in a range of asset classes. Those mostly include hundreds of buildings around North America and other parts of the world in public storage, and other alternative classes such as multifamily. They do other things too. They have a construction group, an insurance group, and all kinds of other vertically integrated things. But he just brings a tremendous amount of tactical and strategic experience to the table, and he's applied that to the great benefit of Prime to ultimately transform their portfolio in where prop tech, whether it's an air quality sensor, whether it's an occupancy sensor, whether it's a self-serve kiosk, whether it's maintenance, whether it's some other IoT device, or even protection of that IoT device from being hacked by some cyber criminal, and everything in between in terms of integrating all that data into a place where decision makers can say, okay, we've saved this amount of money, but we could save this much more, or we're having these issues, and these are the frequency of occurrence of these issues. So let's do something and let's make the experience better. So I look forward to him joining the call. And but in the meantime, let's do a pivot. So Stuart, I want to start with you. Really two questions. First of all, what is property technology? And secondly, what motivated you and your peers to establish the U.S. PropTech Council?
Yeah, so on the PropTech Council, big shout out to Amy Pavato, who really had the vision and the ideas for starting this council. So it's a nonprofit trade organization that promotes everything within property technology. So back to your first question, what is property technology? We get into real estate, anything that touches real estate. And as everyone realizes or may not, it's a very broad industry that is very fragmented. When you say real estate, talking residential, talking multifamily, talking owners, occupiers, investors, funds, private equity, lending. It is just very fragmented. And yet it's also an SMB industry. Other than CBRE, JLL, and a few other ones, the largest ones are still relatively mid-sized compared. So it's also an industry that is very knowledge-based. Who do I know? What are my contacts? I'm going to do deals just with people I know. And it's a very knowledge contact-based industry. And the recognition by Amy was that we need support to get visibility for the founders. We need support to get people to understand what it is, to realize, because it's just it's big. 5,000 plus prop tech companies, which could be bad too. I mean, we all get inundated, and there's so many of them. But you also realize just the breadth and the scope of the industry and the metrics that are there, that there's a lot of opportunity. So PropTech Council is there to promote and support, and I encourage everybody to go look at it and participate in some aspect, whether you're a buyer or a founder, government relations, anything to help support the industry.
All right. So thank you for that comment. I want to, and it's probably important to say that these kinds of discussions, I think, best serve the audience when they're balanced with different points of view. And so you have what I would call almost the academic point of view from where, through the lens of Stuart. And I don't mean to label you that way, but that's kind of what I'm seeking, is like totally objective academic kind of point of view, because you've seen so much. And then you have a kind of what I call a service provider point of view. And then the other point of view is an end user. And I'm not saying that CBRE isn't also an end user, but you provide services to a range of end users, whether they're in pharma, whether they're in semiconductor or automotive, or whatever hundreds of other sectors that you serve. So,
yep.
So Chris, my question to you is, when you think about prop tech, whether it's a sensor solution or something else that you have in mind,
right?
Is it something that you kind of have a programmatic solution that is across the thousands of companies that are served by CBRE globally, or is it something that you and your leadership team on the account tailor for your client?
Yeah, great question. So as Stuart gave you the widest lens of prop tech, I'll probably dial it down into something that has more of a relevance to commercial properties, where large corporate occupiers call home, that need different types of outcomes. And to your point, we serve about 8 or 9 major industry sectors. So if we see a cluster of financial service clients needing similar things, the sector that serves that group within CBRE has a digital team that could start to develop product and/or solutions for banks at large, or pharma, or industrial manufacturing, or healthcare companies as examples. So we do have innovation somewhat happening within industry sectors. We also, above that, we have corporate level investments being made in technologies, which I would call enterprise grade, right? Those are sort of back of house systems that enable us to do the basics of people and financial management. But there's also corporate systems that allow us to aggregate data in new ways to deliver either sector, or where I sit on the other end of the spectrum is an account level. So as we serve one life science firm within our sector of 20 life science clients, we're going to see needs within this client and places where they want to invest that might be distinct from the other pharma companies because of their product line, because of their talent base, because of the geographic footprint they operate, or quite frankly, like in my case, maybe their sustainability objectives are trying to push the envelope, and so they're willing to look at returns and use cases on things that drive a carbon footprint reduction more than others. So we try to innovate, and within our D&T organization, we try to take the best of the corporate level, the sector level, and the account level ideas and investments to create differentiated outcomes for our clients.
I appreciate that. So I'm going to pretend I'm your client, just for the fun of it.
Yeah.
And I have a pain point. And my pain point is really about the people. I don't know where my people are in any given day, and I don't know how many people are coming into the office.
Yeah.
Day by day, week by week. Is there some trending? Because I want to use that information, for example, to either build more real estate, or adjust the real estate that I have, or maybe get rid of some. So what do I do?
Yeah. So that's a live example for sure. Many of our account teams and sector teams are working on how do we take the variability in utilization, especially within a weekly cadence, and turn it into either efficiency gains on cost or experience gains on, value, right? How do we magnetize the workplaces when we know we're historically low? What can we use for data or programming to attract people in? And on the flip side, if we know we're not going to get anybody in on Friday afternoon, what can we start to do to level service, reduce service levels, reduce energy consumption, change the way space is consumed? And it, somewhat ties to the way buildings are designed and configured, and somewhat ties to the data systems we have available in a building or floors. And then, of course, relies on how the service providers are willing to adapt and work with the supply chains behind it. So we were in a workshop this week where we're trying to think through how do we exploit experience, how do we modify cleaning, and with the basis of both sensor technology and Cisco Spaces data sets, enable us to do something more dynamic, more active in our delivery model.
That's awesome. Stuart, I was thinking about a use case that reminded me of you and kind of riffs off a little bit of what Chris just said, which is maybe 6-7 months ago, I heard a story. It's public, by the way, it's published, so I'm not sharing anything confidential. But at one of the Google properties, so I think they own Waymo in San Jose, or is it Santa Clara or San Jose? I can't remember. Anyways, they installed a bunch of prop tech, or they have installed a bunch of prop tech at their Waymo headquarters. In particular, they're relying on their occupancy sensors. They have a specific brand they use that not only counts the number of people that come in the door, it counts where they are throughout the day. It measures the dwell time, how long they spend, for example, at their desk or in a conference room or in the cafeteria and so forth. And then they, this blew me away because it kind of allows us to shift our conversation a little bit. They do two measurements on occupancy throughout the day on a work day. I think one somewhere around 8:30, the other somewhere around 10:30, and they feed that information to the cafeteria. And the cafeteria says, oh, so let's say we have 500 people in the building. Well, we're going to make 500 meals plus some margin, 1 or 2%, but no more. And what they found is significant cost savings, like somewhere in the range of 8 to 10% annually on just food cost. And then they use the same data and they feed it to their FM, they're the facility management people, and say, well, these parts of the building were not used much this week, so don't clean those parts of the building. So I'm curious, do you see use cases like that? And kind of what are your thoughts in general on those kind of use cases?
Oh yeah, they are very strong use cases. And so what you're talking about is on the occupier side of things, right? Where Chris and CBRE and even tenant experience. So multifamily is where you also get a lot of use cases. And Lon, I'll give him a plug. I know he's extremely busy right now and not able yet to show up to the call. He worked at Carr that had multifamily, and he installed a lot of sensors to understand, who was coming in and out and how they can make that experience for the multifamily resident better. It's the same thing on the occupier side. And the difference between occupiers and the rest of real estate is occupiers, how do we make the experience of the worker and the company as efficient, as cost effective, have the best results for that day and the experience for that day, versus how do we make our investment in real estate the best that we can do? We're going to invest in residential or multifamily or commercial or data center or life science or wherever. So there are different use cases. If you go back to the I am going to show up, then there are many use cases. How many people are coming in? Is my space being used effectively? Are they going to the hub, or is everyone going to the desk? Are they showing up at the desk? Are they working with the right team? Do they show up just for lunch or coffee, which sometimes happens? How are they using the space? Is the space creative and working to the best productivity level of the employee. And those are just a few, but there's more that Chris can expand on too. And so bring it back to PropTech. There's a lot of companies trying to address each of those pain points.
Yeah. Go ahead, Chris.
And well, I do think because people are those that have the ability to be flexible in their work patterns are choosing to show up for a specific time, for a specific reason, a meeting, a boss is there. It's more almost targeted arrivals. We have to make sure the spaces they need are ready to go at a high level, right? So meeting room readiness and the support services around both small meeting and large meeting readiness. We used to always staff around large meeting readiness and event planning. We're quickly seeing even a 4-person meeting might have the same expectations of AV support, food support, like all kinds of things that go into curating experiences. And I think that's what's happening is, think about 5 or 6 years ago, we were focusing a lot on workplace apps, right? Workplace apps, including us. We had one called Host Digital at the time. We're going to change the game because people could have everything at their fingertips, from work orders to food to wayfinding to all those things. And in my mind, since COVID, the QR code has kind of killed the workplace apps. We're not seeing a lot of adoption or demand for workplace apps like we used to, although many people still want convenience at their fingertips. We've kind of changed the tune a little bit because we're focusing on optimizing these pockets of high peak Wednesdays and low peak Fridays, because at the end of the day, as clients right-size their portfolio, so back on the real estate side, there's still a very deliberate effort to get the right amount of space at the right price point and upgrade what you have, right? People and clients in the occupier side are still optimizing to reduce square footage, but there's no question the square footage they retain is going to have higher acoustics, higher quality, higher service levels, higher aesthetics, et cetera, at just the right location. So it really is a really refined data stream powering a refined service delivery model is where the investment in use cases pay back the best.
This is good. So this brings on naturally a next theme that I'd like to explore with both of you, which is scalability. So the question is, can it, quote unquote, it, whether it's an occupancy thing or an air quality thing or something else, can it scale across multiple properties or assets? And if so, from an analytics standpoint, how do you visualize that? Do you because we always talk about having actionable insights. Yeah. So, do you measure ROI per building, and do you put like a red, yellow, green kind of alert on some kind of mapping across the portfolio? Do you measure occupancy cost per unit or cost per unit reduction or network benefit effects? Like, I don't know. I kind of want to dig a little deeper now. So the theme is scalability, and then but either of you, if you feel comfortable talking about that.
I'll give you one example. Yeah, one example. So PropTech can still be in a lot of places, right? It can be sensors. It can be, now we're trying to figure out AI, agentic AI strategies within gaps across enterprise technologies, right? There's lots of places where pools of data sit in various applications or enterprise applications that don't talk to each other. So in my mind, that's an analytics opportunity to both integrate the data, connect the data, and have the data tell us something that informs operation. On the other end of the spectrum, I have a friend who's in North Carolina who was out of college, started up a drone business for the property sector and was trying to figure out where's the right place to intersect drones with property and facility management. And he arrived at, maybe I should deliver drone window washing, cleaning as a service through drones. And then that has sort of ran through a life cycle of startup and maturity. And now he's in the, maybe I should be designing and producing drones that have a variety of applications for building exteriors and building envelope sensing. So it's interesting to me, right? The things that are enterprise grade systems and applications they're already built to scale. They're already built to be multilingual, multi-currency, multi-user, and that helps us in one way. But then on the other end of the spectrum, there are innovations that we generally try to pilot at a site level and determine if it has a portfolio application.
Let me be your client again, if you don't mind, Chris. And I say to you, hey, that friend you spoke about with that dishwashing as a service, or sorry, window washing as a service.
Yeah.
Sorry, maybe I had a slip of the
Drones
tongue
to
there.
do dishwashing. I don't
Right.
think they've tried that one yet.
So if I'm your client and I say, you spoke to us the other week about this startup that's doing using drones for various services, including window washing.
Mhm.
I guess I want to know, first of all, how's that going? How do we get in on that? What's the cost? And
Yeah.
if we did it, like what does it cost us today, for example, to wash our windows on our headquarters?
Yeah.
And what if we use your guy?
Yeah.
Let's say once all the implementation costs are factored in, kind of go steady state.
Yeah.
What would it cost? And then what's the delta?
Yeah. So from an investor lens, right, an investor and prop tech lens, I'm looking for users and investors who can help me come along with the tooling and startup and the business case. As an occupier and a service to occupiers, I'm looking for something that's already proven through the initial hurdles of early stage startup and can, literally come onto corporate properties, deliver service, be insured, be reliable, be back, So to me, in this phase of startups, we have to have a certain level of maturity just to, as a table stakes element. But the ability for us to go to our client and say, let's put a little bit of money at risk because this could have a benefit. We have to show our clients the spend they already have and where that can taper down in a reasonable amount of time. Just like an energy use case, there's a lot of money in services with third-party suppliers that we're always trying to optimize. We as CBRE, one of our value props is to go in and self-perform technical maintenance services to reduce the client's burden on third parties who will often mark up parts and labor and have other service charges. So it helps the clients and it helps CBRE grow. But at the end of the day, we'll always use third parties that can bring a capability we don't have. And especially when they're emerging technology capabilities we don't plan to invest in. We don't plan to invest in window washing drones. So why wouldn't we help a handful of them figure out how to scale, how to serve commercial occupiers, and do it as globally as possible? Because my remit is 15 countries, not 15 properties.
Sure, and especially kind of, and Stuart, I do want you to chip in, but Chris, I know especially when you have companies such as CBRE that has mandates, for example, to have a certain amount of spend for a minority-owned business, and maybe it might be just coincidental that the drone company is owned by a minority, whatever the classification might be, and you're like have double motivation, right?
Yeah. So that is interesting, though. That's a timely topic because with the current political wins, some companies are trying to still get the outcomes, but change the label around some of those initiatives right now. But Stuart, what's your take on enterprise? You've been on the journey with us. There's enterprise and there's entrepreneurial, and it's kind of we're looking for innovation all up and down the stack, are we not?
Yeah, and I've seen it from the VC side, the small investor. Small real estate investor perspective, and then large CBRE. And so there are different lenses. CBRE-ish, JLL are going to look for large enterprise type companies because that's where they are. On the other hand, again, going back to the industry being very fragmented, there is so much opportunity from the smaller firms to be aware of what's going on, to try things. You might fail, but you got to understand that that's okay. But it also comes down, so scale is very important, and scale can be just the number of properties, or it can be the number of types, diversity of investments you have. So scale is very important. And that's why you really got to pay attention to the market. You got to understand, you could try to have a good eye of, are they telling the truth? Are they giving you bull in what they say? Is there potential for them? Are clients happy? But one thing Chris said that I do want to go back to is it all gets back to the data, right? The one thing that any prop tech these days has to be able to support is getting data out of those silos, getting it connected, exactly to your words, Chris, which was spot on, because without the data connected, then you're not able to leverage analytics, advanced analytics, AI, whether it's AI agents or agentic AI, which is the whole workflow and the A to Z of a process. That is where you really need to pay attention today to understand how to highlight that data, get it out of a silo, and then be able to do something with it, actionable insights.
Just a thought to both of you, but if you have any screenshots or anything you'd like to share on this call, please feel comfortable, because I think it's probably of interest to this group. If not, that's fine too. But I just want to extend you that courtesy.
Let me, I don't have a screenshot, but let me just verbally share what's kind of one of the things we shared with the client yesterday. So as we're laying up plans and strategies for 2026, our clients want to see the best ideas to drive efficiency and the cost efficiency down and experience up, right? And there's many inefficiencies when you work across a corporate portfolio. And we are looking for ways to deploy, in our vernacular, we call them low code, no code, right? How can we use simple tools like smart sheets to connect teams to be using the same data sets? To your point, Stuart, it doesn't help when minor sub processes are managed differently across properties or states or regions that don't allow us to see the true insights we're trying to do. So there's basic blocking and tackling and process gaps. There's ways to point technology. There's things that are fairly standard within applications, and let's just say they're between two large enterprise applications, but we need the two applications to talk to each other without building a full integration layer. So maybe we start looking at robotic process automation as a way to get bots to do things that humans are doing now, and I can redeploy that human talent into experience things on the site. And then there's things where, as these large language models are starting to be developed for bespoke reasons and uses, almost like Copilot is Microsoft's brand, but I like the name a lot, because what if we just had agents or co-pilots working alongside our facility managers and project managers and brokers saying, these are all the data points you should be thinking about as you're actively managing your workflows. So to me, all of those things are prime for new technology use cases, but we're not going to tackle any of them if there isn't a dollar to be saved, because I know I'm going to have to invest time and dollars to move forward on any of these initiatives, but I have to see a savings benefit somewhere in the labor costs, the supplier costs, or the energy costs to initiate the conversation.
I want to introduce to both of you another opportunity, though, another motivator or vector, which is compliance. So when you think of regulatory and compliance, so does it meet local building codes? Does it meet energy efficiency standards? Does it meet data privacy laws? Does it meet your percent uptime goals in terms of operational resilience? So the question is, if you had XYZ prop tech in a building or in a portfolio, could you avoid some of these compliance penalties? Could you, using your terms, could you leverage some of the robotic process automation to monitor these things on some kind of building management system or through a BMS and say, we can improve our ESG score, for example, or we could lower our likelihood of penalty?
Well, I think you have to look at how the regulatory landscape is changing, especially with carbon emissions, right? With Local Law 97 in New York as putting in place known penalties to building owners at a set date, at a set impact level, it clearly has accelerated investment in efficiency technologies. New York and California and Boston and others have put in those legislations, and it's important for us as the service providers and owners and investors to be watching that regulatory framework. I'm watching corporate clients saying, as the cost of power is projected to go up, as the cost to support and expand the grid is going up on the backside of data center demand and AI demand. Clients, corporate occupiers that are focused on their sustainability objectives have to be thinking about green power purchasing differently. And that may be on-site renewables, it may be virtual purchase power agreements, but even that, in my mind, is a form of prop tech. Where can you help me spot the opportunities of where the energy markets, where the functional obsolescence of our existing renewables are, and how do we take advantage of the moment when incentives at the state or local level are available? It's all a dynamic motion
Listen,
picture.
you can have a bot that goes out. We can
Right.
have a bot called Chris that goes out and searches. Let's say you have a client in New Jersey, and you do a search, local economic impact development opportunities, or changes of law at the state level, and your bot goes out and searches that every morning at 3 a.m. and comes back to you with a report, and then you can filter through that in your own way.
Yeah.
It's interesting. So I guess it's a part of the thought where I'm thinking where my mind goes now is kind of a prelude to the next step. So the next step I want to get into are some actual case examples that you can redact all the names of the innocent, but I want to be, if we could, a little specific on a before after scenario where you had some client that was doing something and this was a pain. You put in some prop tech, and a month later, 6 months later, you measured the difference. And so I want to get to that in a second, but before we do, maybe to close out this section of our discussion, to the extent that you're successful or that your clients are successful at implementing what it is that you recommend, true or false, do you think it improves the asset value in a reasonable time, let me say within 18 months? So does that make sense, or should I reframe it?
I think the payback period varies dramatically, both by the cost of capital of the client and their appetite for risk, right? I think 18 months would clear most people's hurdles, but most investments are not going to clear that fast, that I've seen. I do think the trifecta for prop tech investment or any business use case is when assets are reaching end of useful life. There's already an obsolescence factor starting to come into play. When there's an efficiency, primarily energy, but other types of efficiency gains that can be garnered, right? Whether it's third-party services or energy or other things, and it reduces carbon footprint, right? If we can also electrify efficiency and produce better uptime outcomes in an office building, in a research building, in a manufacturing building, in a retail building, to me, corporate clients are interested in seeing where those opportunities exist. They may or may not have the capital to go after it, but they want to know where those opportunities exist.
Excellent. Stuart?
Yeah, right. 18 months. It's hard to set exact time frame, and what you're looking at can be different. For example, if you're looking on the other side, on the investment management side or owner operator side, you're looking at how many deals you can look at one time, right? You're looking at how quickly you can get to dispositions. You're looking at, what is the efficiency of managing that property in the work order, which is, also analogous on the occupier side, but on the owner operator side, it is more about the investing and how much you can do, how quickly you can do it, how quickly you can get your properties leased up. So there are various metrics into velocity and speed that support some of those investments. And the hard part a lot of times is, technology augments what people do. You shouldn't look at it and say, I'm going to replace my people. I'm going to be able to do more. I'm going to be able to do it quicker. I'm going to do it better and smarter. And so and the other thing that is really just making sure that everyone is engaged and on the same page to make these successful.
Interesting. I kind of wonder, when you're dealing with some of these critical facilities that include data centers, but now include semiconductor fabs, I kind of wonder what the accelerants are, especially when I think of a fab that a lot of these fabs are multinational for semiconductors. And so let's say you have a big company such as, I don't know, TSMC, they're pretty big, right? and they have their headquarters in Taiwan, but they have operations all over the world, but they have a lot going on in the Phoenix area in the U.S. So I kind of wonder, when they're trying to keep things super stable 24/7 for all the different processes that are necessary to have the highest yield for their factory. And I'm also wondering about the experiences that their people need to have, just to keep safe, because they're dealing with a lot of strange chemicals, but also, to feel inspired, so what kind of prop tech in terms of, light and sound and who knows what else that people sense. But I'm also wondering about some of these, I guess, for lack of better terms, some of the risk factors having to do with some of the recipes to make these things, to make these devices without being stolen, right? So you have all kinds of actors out there who want to disrupt operations for various reasons. So I kind of wonder, when you do some kind of prop tech implementation, it's kind of a true and false question. Do you always build in an OT cyber dome around it, or some kind of surround it with something to say, okay, I'm going to make sure whatever I do implement doesn't increase the risk. It achieves the goal it's supposed to achieve, whatever it might be in terms of user experience or tenant experience in general. But I'm not going to increase the risk in terms of operational resilience. I don't know. Stuart, why don't you take on that?
Well, yes, but not everything has an OT component. So let's, again, broadening the investment in real estate. On the sensor side, on the physical asset side, absolutely. But if you raise that upper level, let's just say cyber. You want to make sure that everything you do has a cyber component, whether it's data, whether it's AI, whether it's implementing a new tool, and do they have SOC on their back end? Do they, do they have their act together? So cyber, absolutely. OT is going to be more on the physical side, but data, especially with AI and some of the threat actors that are trying to get leverage some of those approaches, is absolutely top of mind.
Interesting. Any thoughts, Chris?
No, what I was going to point out, though, is as these large chip companies and pharma companies and data center companies are pouring billions into building construction, facilities, siting, and locations, there is a role for prop tech to help mitigate the risk around delivery. I see Neha asking where some of these hidden costs or what undermines initiatives. What undermines initiatives is when you can't forecast risk properly. The cost of something, the schedule of something, or the impact to humans or product, of course, right? So to me, often because there's so many complexities of signing off and getting clearance, in large corporations, there's a ton of stakeholders who get a voice in the process. That's often in a challenge to prop tech adoption. But especially as new construction and new industrial construction is coming into a marketplace where there's fewer contractors with fewer sources of labor and supply chain disruptions, the ability to forecast outcomes is a big deal in the large CapEx space right now.
Makes sense.
Yeah, that's a good one.
All right.
So I'll add in just on that one,
please.
Same question. It's going to be the other hidden cost is change management, right? The adoption of whatever you're doing. Everybody needs to be on the same page. You might be able to, and you don't underestimate the change management that's going to happen in a company when you roll out new technology. It really doesn't matter what the technology is.
I'm glad you mentioned that, because there often is a unspoken resistance.
Yes.
And that can impact, that can slow down the success of implementation, which then will influence whatever metric you're monitoring. It's very interesting. Thank you for bringing that up. Let me ask you, maybe as we close out, to think about a specific use case or a situation. And again, you can be specific with names or not, it's your choice, but maybe give us enough to tease. Can you think each of a situation where your client was expressing some pain, or there's something going on they wanted to improve, and they were very clear they needed you to help them do that, and then you could kind of quarterback that moment. You may, whether it was a week later, a month later, a year later, but you got it done. So which one do you want to start?
I'll give you a quick one because I know we're up on time. So one that falls into that threshold I mentioned before. We had so within one of our financial service clients, they had over 4,000 retail locations, and they had end of useful life conditions on a lot of rooftop air conditioning units. And they came to us and said, we've got energy efficiency issues, we've got operational issues, and we want to handle this as a program, not wait to fail the unit. We don't want the customers to endure the replacement. So we went out and identified, I think, 50 branches that met the criteria of end of useful life, energy efficiency gains, incentive availability. And we went to a third-party capital provider and said, help me bundle this up with new sensor technology. So at the end of the install, I have a lot more information about what's happening with temperature, humidity, age, use, asset uptime, and we put a program management or program around it. So it was very successful. Our average cost of installed ton went from $5,000 of installed ton down to $3,500 per installed ton. Our energy efficiency gained almost 18% on the billing of the energy, and we got much better data coming back to us to a centralized place. So we knew how the branches were actually functioning with HVAC output. That went well, and then it got repeated itself 4 times. And that third-party capital provider got taken out at the end of each cycle. So it was a win-win-win.
Wow. Now I know why you're in charge. That's an amazing story. Wow. All right, Stuart, top that one.
Actually, well, I'm going to pivot real quick. I want to answer Sky's question about, how do you move from pilot to large scale to rolling out? Because I think that's really important for people to think about when you implement prop tech, is to have a programmatic approach, right? Start small, understand, but iterate and learn, and make sure that you have champions that are going to support that. You try something, you're going to learn from it. It's rather going to be completely successful, exactly how you thought it might be. Understand it, but then get everybody on board, programmatically approach it. Don't have, shadow going this way or shadow going that way. If you want to scale across your organization, and then roll it out. But if everybody's on board and you learn, you iterate, find where you failed, fix it, and move forward, that is a way to success.
Fair enough. You want to give an example, or what should we close out?
I could give hundreds of examples. I've had failures. Just implementing. We did a lease abstraction. We created a lease abstraction for one of the clients, and worked out great in the beginning, and then found out that we had errors in certain types of leases, and then brought that back, learned. But it was a programmatic approach. I had everybody on board that we're going to take our time and learn it, and then it was successful. But
what was the measure? Yield, lease abstraction yield, and then
number of
cost
errors
per lease abstraction.
Yeah, and then number of errors is actually all about errors and getting it done right, especially earlier on before before LLMs, where the approach was a lot different than it is now. It was much harder. Yeah.
Well, brilliant thoughts, really. Thank you both. I appreciate it. We had a nice participation. We peaked at about 24 people, and I appreciate the questions. And we'll be back next month with the next topic on the 19th. And I appreciate your time, Chris, Stuart, Sky. Thank you for producing, and I wish you all a safe and happy weekend.
Thank you.
Have a great day.
Bye-bye.